and welcome to Financial Express. I'm Roshan Puvaya. Today, we're diving into the Economic Survey 2025-2026, the definitive report card on the Indian economy. If I was to sum up what the survey says in one definitive line, it is this: India is running a marathon and a sprint simultaneously. Despite a global environment filled with geopolitical shocks and trade wars, India has emerged as the fastest growing major economy for the fourth year in a row. Let's look at the big numbers. India's real GDP growth for FY26 is estimated at a robust 7.4%, surpassing initial projections and demonstrating strong domestic momentum. Perhaps the most significant update is that India's medium-term potential growth rate has been revised upward from 6.5% to 7%. This reflects the compounding effect of a decade-long structural reforms in infrastructure, taxation, and digitization. India now contributes 15% to global growth, maintaining a steady course even as advanced economies struggle with aging populations and high debt. Let us look at the fiscal consolidation. At a time when global public debt is at record highs, India's fiscal strategy is defined by credible consolidation. The government achieved a fiscal deficit of 4.8% of GDP in FY25, beating the budgeted 4.9%, and for FY26, the target is even more ambitious at 4.4%. India has also set a new fiscal anchor of achieving a debt to GDP ratio of 50% plus or minus 1% by FY31. If you look at the quality of spending, there's a decisive shift from revenue expenditure to capital formation. Effective capital expenditure reached 4% of GDP in FY25. There's also some tax buoyancy. Direct tax collections reached 53% of the annual target by November 2025, while GST continues to hit all-time highs. If you look at inflation has been significantly tamed this year. Headline CPI inflation declined to a remarkable 1.7% in FY26, that is April to December, primarily driven by a sharp drop in food prices. While core inflation, that's excluding food and fuel, appeared persistent. The survey clarifies this was largely due to price spikes in precious metals like gold and silver. And you all know gold is hitting all-time highs. So what's the outlook? Inflation is expected to normalize towards the 4% target in FY27 as the base effects wear off and global commodity prices remain soft. Now let's look at the various sectors. India's growth is increasingly broad-based, with services leading the way and manufacturing now finding new strength. If I talk about services, it is a high growth sector. The sector is estimated to grow by 9.1% in FY26, up from 7.2% last year. Services now contribute over 51% to India's nominal GDP and are the largest recipients of FDI. The survey highlights the orange economy, that is creative industries like space services and ocean technology, as the next big growth levers. If I talk about industry and manufacturing, there's a structural shift in manufacturing. Manufacturing grew by 8.4% in the first half of FY26. There's a clear transition toward high technology manufacturing like semiconductors, EVs, and electronics, where competitiveness is driven by innovation rather than just low costs. The survey mentions the National Manufacturing Mission as a blueprint to double manufacturing's contribution to GDP to 25% and create 143 million jobs by 2035. The other sector I want to talk about is agriculture, which the survey mentions. There's stability amid volatility in the agriculture sector. Sector is estimated to grow at 3.1%, while crop growth remains volatile. Allied activities like livestock and fisheries are stable at 5.6% growth. The focus is shifting to soil health, digital agriculture, and raising yields to secure farmer incomes. We'll see a push here in the budget as well. If I look at the external sector, India is playing the long game. India's external position is fortified against global geopolitical statecraft and trade disruptions. India has had record exports, Total exports reached an all-time high of USD 825.3 billion in FY25. There's a services surplus also. The surplus in services trade reached $188.8 billion, covering 2/3 of the merchandise trade deficit. And forex reserves, India's war chest stood at $701.4 billion as of January 16th, which is enough to cover 11 months of imports. The current account deficit moderated to a very sustainable 0.8% of GDP in the first half of FY26. Now, the next big thing, the AI revolution and urbanization. The 2026 survey introduces two special chapters on two critical future themes. Artificial intelligence. India is, of course, second globally in AI skill penetration. The survey proposes an AI economic council and a phased roadmap to transition India from an AI adopter to a global innovator in AI. Urbanization. Now, this is interesting. Indian cities are facing a governance deficit. The survey calls for making cities economic agencies by fixing land, mobility, and sanitation constraints to improve the quality of life. Now, let me talk about strategic indispensability. That's the new mantra. The survey shifts the narrative from import substitution to strategic indispensability. This means building domestic capabilities in global value chains so that India's role becomes so critical that global partners cannot easily substitute us. So, what's the outlook for FY27? There's going to be steady growth amongst a lot of global churn. As we look ahead to the next fiscal year, the survey maintains a tone of strategic sobriety. Real GDP growth for FY27 is projected in the range of 6.8% to 7.2%, which is slightly lower than this year. The key risks, the primary risks are external, protracted trade conflicts, a potential AI bubble, and correction in global markets, as well as volatile capital flows. The Indian advantage, of course, is our strong buffers, forex, healthy balance sheets, and fiscal discipline, which means these risks are manageable uncertainties rather than immediate stresses. The survey concludes with a message from the Katha Upanishad that India has chosen the path of Shreya, opting for delayed gratification through fiscal discipline and long-term reforms to build a resilient Viksit Bharat. The Indian economy isn't just surviving the global storm, it's reinventing itself as a global hub of innovation and stability. The top takeaways: 7.4% growth is the new reality. Inflation is under 1.7%, which is under control. It will continue to remain at around 4% in the medium term. The focus is on indispensability, making the world need India as much as India needs the world. So, what do you think? Is India ready to become the world's next high-tech factory? Let me know in the comments, and don't forget to like and subscribe to financialexpress.com for more such deep dives into the numbers that matter. Keep watching Financial Express, and we will be back with comprehensive decoding of the Union Budget.